What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous May 3rd, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. Hey, I had a fantastic day with Robert Bryce and Meredith Angwin, both well-known authors, and also on a podcast with Mark Penguin. He is a wonderful CPA, and we talked about 1031 exchanges in oil and gas and RT.
Yeah, no, that's awesome. The 1031 exchange is going off right now. It's extremely hot. So if you have a 1031 exchange, call Stu. He's the guy. You can hit him below in the description. We have a crazy show lined up, Stu. The menu is sort of doom and gloom. It's a great Stu style show. There's a lot of big articles, guy. First article we're about to cover here: rising oil earnings allow Russia to resume purchase of foreign currency. Oof, this is one of a factor in why oil prices were down, but this is crazy. Stu will cover what's going on in Russia next. Louisiana oil and gas still has a place in the future of energy. This is a nice opinion piece, specifically looking at what's going on with Louisiana in the oil and gas business. Next up, a decline of the USD, a strategy of diversion and alternatives. Stu's been banging his on the table for this year after year. BRICS dollars coming. We're getting off SWIFT. This is a nice deep dive into what's really going on with the dollar. Next up, the rise of copper in the mining industry, mergers and acquisitions on the horizon. We'll cover a little what's going on in the M&A in the mining space. Gotta love that. And then finally, really the main driver of oil prices today, U.S. Treasury say government may default on debt as early as June. It's not as scary as it sounds, but oil prices did definitely take a hit. Stu will then kick it over to me. I'll cover again oil down to $71.62 after starting the day well above $75. Nat gas just dropped about a quarter of a percentage point down to $2.02. And then we'll cover quickly what the API is forecasting in the EIA draw. Then we'll let you get out of here, get back to work. But before all that, guys, we get going again. Check us out online, www.energynewsbeat.com, the best place for all of your oil and gas news. Dashboard.energynewsbeat.com, your best place for every data and news combo. Stu does a great job of making sure the website is curated with all the top energy news. Description below have all the links to the show, to the articles we're about to cover. Stu, I'm out of breath. Where do you want to begin?
I don't know, Michael. Let's see. Let's start with my favorite Putin here. Russia oil earnings allow Russia to resume purchase of foreign currency. Russia's purchase of Chinese yuan as its primary asset for energy transactions highlights its ability to weather the impact of sanctions. Michael, we've talked about this ad nauseum, but this is actually a fantastic article from the standpoint. It says, the price of Russian oil is about halfway through the article, Michael. The price of Russian oil was set at $34 per barrel before April 2022, eventually falling to $25 from July. The Russian leadership accounted for this change with increased taxation on producers. The weak domestic currency also helped bridge this price gap. However, earnings from oil and gas have declined by 45% in the same time, 2022. This shortfall exceeds the Russian finance ministry for all of 2023. Let's see here. They sold 47 million worth of Chinese yuan to buy back rubles. I'll tell you, Michael, what this is telling us is that there is a market for currencies. In fact, that's how George Soros actually made all of his billions originally, was taking countries down on their currency.
Specifically, he got very famous in the UK for shorting the British pound. No, I mean, I think, this is an interesting article, and I think it flows into specifically the decline of the USD, which I think is the next article that we have to cover, which is what now is there an alternative for Russia to start, even as they've been selling their oil for the yuan? What else do they go with?
Oh, absolutely. This article came off of LinkedIn, and let me see if they put it in here in the notes. Source LinkedIn. Oh man, this was a good guy. I love him on LinkedIn.
Mhm.
There are four major bullet points here, Michael.
Yep.
The US EU seizure of Russian central bank reserve after Russia attacked Ukraine will be remembered as the white asshole genius moves. Oh, I should have said ass star holes. Genius move that sealed the fate of the USD. You and I talked about that. They overstepped it bad. Number two, sanctions cutting from SWIFT and seizing USD reserves confirmed that U.S. had broken the convention of global reserve currency, i.e., that it must be neutral and freely available. Michael, they crossed the line. They should not have crossed the line.
I think it's also interesting to point out that in this, the Chinese number three, Chinese say they specifically do not want the yuan to be the global reserve currency, which
Right.
is interesting. Which is a smart move by them, as this author points out, because they want to be able to control against exactly what we pointed out, George Soros, the foreign
Right.
speculation.
But why is China buying so much of the global gold? They are buying more gold than all of the other countries put together, Michael. It's so that eventually they can be the global market backed by gold, not by the petro. So
Very interesting. Maybe they're
personal
gonna.
opinion.
I noticed he mentions in here they're gonna start regulating stable coins and all that crypto stuff. Crypto is going down in China.
Oh, it's going down bad. And I got mixed emotions about crypto. We can talk about that at a different time, but I thought these two stories really rocked in solid with each other. Good points, Michael.
Yep.
Okay. Louisiana, oil and gas still has a place in the future of energy. Michael, this is a great story. Louisiana is positioned to have opportunity to capitalize on changing global market demand and lead in the future of energy by bringing online new advancements in the industry, such as carbon capture and storage, CCUS, and utilization. I want to throw that in there. Blue and green hydrogen and renewable diesel. Michael, there's about 16 really nice big projects going on in Louisiana. And I respect the leadership because they are doing renewables, they are doing oil and gas. Louisiana is home to the Haynesville formation and lots of natural gas. You've got so much going to the Gulf that they have just a huge amount of good things going on. Besides having Tyrus off of Gutfeld there, I mean, Gutfeld's a rock star, and
his ratings are insane. I saw he's the number one late night host.
oh, absolutely, and I would like to have Gutfeld and Tyrus and Kat on our podcast if they're ever listening. So, just want to throw that out.
I'm sure they're listening. I'm sure they're getting their editors on it right away.
Oh, absolutely, but that. Anyway, hats off to Louisiana. Absolutely a positive article. They've got $18 billion in projects announced for carbon capture, renewable biofuels, blue and green production of hydrogen and ammonia, while they're doing all of the normal oil and gas in the Haynesville. Wonderful way to do it. So
yeah, and they're taking I think the infrastructure and investment in the CCUS really will be the bridge between the old and the new, if this is where things are going regardless. I mean, if scope 1 emissions are going away, CCUS is the quickest way to do that. So I think this is smart overall in terms of a strategic play.
Right. And hey, aren't you proud of me? I didn't pick a Debbie Downer or a Karen Downer story. I got you one in there, man.
That was great. That was great.
Let's go to the last one here. The U.S. Treasury, Michael. I was talking to Tomcat today, and I'll tell you, he was about ready to just beat his head against his computer today. He's a day trader that we talk to all the time on the market. Market was brutal today, dude. And it's because the rumor that's going on out there that the US dollar, the balance sheet is going to be devalued, is coming around the corner.
Oh.
US Treasury says government may default on debt as early as June. Michael, I don't feel that there's a real worry about this because the government's never defaulted. However, having its ratings change is critical, and I think that may happen with the way things have been going. Let me give you a quote in here. Given the current projections, it's imperative that Congress acts as soon as possible to increase or suspend the debt limit in a way that provides long-term certainty for the government will continue to make its payments. Fine, I think they're going to do it. But what gets me all wrapped up about this is President Biden saying he is not going to negotiate on raising the debt ceiling. Dude, they've said they're gonna raise the debt ceiling. McFly. Hello.
Hello, McFly.
McFly. They're gonna raise the debt ceiling and they're asking for you to come to the table. McFly.
Of course. I mean, I think this has broader effects. I mean, I think this is a good transition really into what happened with the overall markets today, because this
all you know.
I mean, this news was about, this news dropped at what, 10 a.m. this morning, early this morning. We saw markets immediately fall off the table. S&P finishes down 1.16 percentage points. NASDAQ tumbles about 1/8 of a percentage point. Crude oil tumbles all the way from upper 75s to its current settle point here at 71.59 as we record this about 6:30 p.m. Here on Tuesday. And really the song and dance with oil is, hey, if we default, that's, if more rate hikes are on the way, we're increasing, we're already pushing up against the debt. The macro outlook for the dollar doesn't look good. And this is where things get interesting with all of the US dollar talk of, if oil starts getting traded in other commodities, that's going to really soften that WTI index a little bit. You're going to start, you're not going to get that $100 oil. Who cares what the dollar value is? What's it in the currency that they're trading in? And so that's where it comes down to who accepts dollars for their oil. Now, obviously, everybody still is going to use dollars, but maybe not. I mean, there's, I'm not going to put it past Stu to find us an article that says they're going to stop using, they're moving to a SWIFT currency.
It's like
an alternative SWIFT currency.
Well, it's like you and I said the other night, the British sterling pound has been around for 100 years. That was the global currency at one time. Yeah, the UK, would I want to live there? No, their teeth are all bad and they have horrible food. I mean, that's what happens when your currency devalues.
Yeah, I mean, we also saw U.S. jobless claims fall for the third straight month. Layoffs increased to its highest level in more than 2 years. The theory is that's some softening in the labor market. Hopefully that aids the Fed's fight against inflation, but they're raising rates, so who cares? Oh no, more people are getting laid off. But that does stink. It does stink. I'm sorry. But yeah, they it was I think just an interesting day in the markets, to say the least, Stu. And I think things, I think there's a lot to be said about what happens to the dollar strength and what that means to oil prices. Because up until now, I keep it pounding, hand on the table about what's going on with the oil and how or dollar and how it's related to what's going on with prices. If that begins to slip, we'll have to, we have to stand back and figure out what other dynamics. If we have to start quoting oil and yuan, we'll quit the show.
We'll change to a cooking channel.
Yes, we'll see Stu cooking.
Oh, absolutely. No, I enjoy our podcast too much. We'll figure out something that's of interest. Maybe the pot channel.
We will. We saw crude oil. We saw the API estimate crude oil inventories drop by about $4 million. And then from that standpoint, it's really what does the EIA drop as you're listening to this? Hopefully it's a draw. Prices could use it, but if we see anything unexpected, what if we see 69? That's not good.
No.
But I think that's really all I've got, Stu. What should people be worried about tomorrow?
Watch what the Fed's going to do on Wednesday, and rumors are going to be abounding out there right now. It's a scary time. Look for alternative investments out of the stock market. Watch what the rumors do. If the U.S. dollar yesterday, Michael, was one of the first days that the dollar went down, and so did oil. You know, that inverse relationship, usually when the dollar goes down, oil goes up. That inverse ratio, you just nailed it. It's going to be one of those matrices we're not going to know anymore. So
Yeah.
Don't know. So anyway,
on that fun note, guys, we'll let you get out of here. We appreciate you for checking us out. As always, www.energynewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.